we're getting closer and closer to the next halving event. Plus, the Fed is going to stop rate hikes altogether and may even pivot and cut. So I definitely think the second half of 2023. Coinbase, like many others, coming out with their crypto outlook for 2023. And Coinbase said there's 3 things we should look forward to. 3 key themes. Number 1, flight to quality among institutional investors. Creative destruction that will eventually lead to new opportunities. And foundational reforms that usher in a new cycle. Okay, so that's the 3 basic things. But there's a lot more if you dig into it, right? But to sum up, flight to quality among institutional investors, obviously that means there's more due diligence. They're going to flock to things that they trust, for example, Bitcoin and Ethereum, right? And also to exchanges they trust, aka Coinbase, at least according to Coinbase, right? Creative destruction that will eventually lead to new opportunities. I actually don't know what that means. That sounds bad in a good way, right? That means the contagion is going to spread. There's going to be more destruction. And that's going to lead to new projects coming out. That's what it sounds like. And foundational reforms that usher in a new cycle, that's hinting at regulations. There will be more regulations and frameworks, and some argue that's good, some argue that's bad, right? So you break this down. Flight to quality, of course, that's talking about Bitcoin and Ethereum, long-term holders, right? Look at that. Going to be nearing 85%, okay, going into 2023. That's a big number. 85% of all Bitcoins held by long-term holders. Think about that, okay? Reinforcing the ETH narrative. Coinbase, obviously a big ETH believer. Growth of decentralized future, meaning DeFi will grow, more interest in permission DeFi, okay? Total value locked in DeFi, right? Tokenizations versus tokens. Okay, areas for creative destruction. That should not be how destruction is labeled, but lower liquidity spiral. Okay, talking about, how after FTX collapsed, right? There's going to be lower liquidity, minor capitulation, although we haven't really seen that yet because the hash rate barely went down. And most miners are still holding on to Bitcoin, but there could be minor capitulation. I mean, this is what I'm talking about. The hash rate barely went down. That means that miners are not capitulating. Explore new use cases for NFTs. I don't know why that would be creative destruction. That should be a positive thing. All right, and then more urgency with regulatory clarity, lending practices, probably no more for a while. Path for institutional adoption, and likely path of prices in the next 12 months will stay range bound. So according to Coinbase, they think the next 12 months we're not going to see any movement. Basically go sideways. And then they think 30% chance it'll trend lower, 8% will trend higher, and 10% don't know. I would disagree with this. I do think the first 6 months of 2023 will probably stay range bound, but second half of 2023 we will definitely trend higher. We will definitely trend higher because we're getting closer and closer to the next halving event. Plus, the Fed is going to stop rate hikes altogether and may even pivot and cut. So I definitely think the second half of 2023 is going to be trending higher. But anyways, it looks like a normal report. I mean, I think that's decent, right? But there's one guy that does not like this, and that's Charles Hoskinson. He has a problem with this. Not a single mention of Cardano. Pretty low and pretty sad. I honestly expected better. I mean, what did Charles honestly expect? In the report, it basically only mentioned 2 projects, Bitcoin and Ethereum. Didn't mention any other projects. It's not like Coinbase mentioned Solana having a great year in 2023. They didn't mention Polygon having a great year in 2023. They just stuck with the basic Bitcoin and Ethereum. So I don't know why Charles is so mad at this. It's not like, Dogecoin or SHIB was mentioned in the report, right, being positive. They didn't mention anyone other than ETH and Bitcoin. So had they mentioned Cardano and sold them out in the report, that would actually look pretty fishy if you ask me, because they didn't mention any other project. So yeah, Charles is pissed off at this for some reason. But what did happen in 2022 and what's going to happen in 2023? Well, 2022, we know that Cardano had the Vassal hard fork. Okay, that was a pretty big hard fork. Increases throughput, capacity, security, all that good stuff, right? We haven't seen an explosion in DeFi in Cardano just yet, but many speculated after Vassal hard fork we would see more. We haven't really seen that yet, but 2023 could be a growth year for Cardano, right? Also, Cardano is working on something called CIP 1694, which is a proposal that lays the foundation for community governance and self-sustainability. This is something that not a whole lot of projects worry about, but Charles wants to make sure that Cardano becomes fully decentralized. So much so that even IOHK and Emergo and Cardano Foundation can't be making all the decisions, and it removes their own power from Cardano. And that's great. That's great, right? But still, some argue that you need to have a strong leader. You need to have someone that's taking reins and moving the project forward, right? And is this really the time for that? And we'll see. We will see. Maybe in the end, this is the right way to do it, to make everything decentralized. But right now, very little projects going this path, other than like a few smaller DAOs. All right, so that's what Charles is so angry about, being snubbed in this report. So we'll see. Alaska is going to add some new license. So if you're in an exchange and you want to operate and sell to citizens in Alaska, you have to apply for this new license. I don't think this is a big. I don't know how many people live in Alaska. It can't be that. There can't be that many people. So I don't know why they need to add this, but I can understand. California doing this, they actually got pushed back. I know Texas already does this, New York does this, but if you were like a bigger city or bigger state, I should say, with many more people within, it makes sense. And for Alaska, it's like, okay, you got 10 more people that that can't get access to Coinbase, big whoop. All right. Veteran hedge fund Dan Moorhead, who controls hedge fund of $4.5 billion in assets, thinks that DeFi is going to really lead the way in the future. Okay, I just got done talking about decentralization of Cardano, but kind of the same premise, right? You have projects that are basically controlled by code. Okay. And what's great is it takes human subjectivity and emotions out of it. It's an interesting way to look at it. DeFi is definitely growing. I do think it's going to stay and evolve, right? It's still early. It's still very early, but I could definitely see how DeFi can expand way bigger than what it is now. So, yes. All right. What else is there? Speaking of DeFi, Uniswap is partnering up with MoonPay, so you could buy directly on Uniswap now, right? With your credit card and debit card, you don't need to go through a centralized exchange anymore to buy crypto. See, this is part of the evolution, right? As more and more people go straight to DeFi and DEXs like this, takes less power. Takes power away from the centralized exchanges. Pretty good. And then the last few things, because Binance.us won the auction for Voyager, right? Nansen decided to look at how much assets Voyager actually holds. This is excluding Bitcoin because they don't track Bitcoin for some reason with Voyager. But for everything else, there's about $580 million. So I'm assuming the Bitcoin is probably 400 something, making a total about 1 billion, right? So that is how much they have and how much they will be giving back. Supposedly in March, that's a lot, $1 billion worth of crypto that they will be giving back to the people. That's great. And speaking of Coinbase.com, I've been tracking their assets, and their assets have started to come up again. So this bleed, the supposed bank run, right, has definitely stopped, and it's actually reversing and climbing back up again. Just FYI for people that are wondering. And lastly, to give you guys some perspective, again, looking at Bitcoin, looking at where we are, right? We are at a multi-year resistance or support / trend line, right? And every single time Bitcoin hits it, it goes on a pretty tremendous run. So I wonder what the next run will look like. I can't wait for that to happen, right? But of course, you guys know Nike, they reported really good earnings, okay? So that means retailers has a chance, right? Because everyone was expecting everything to crash and we're going to go into deep recession. Well, according to Nike, that's not the case. Nike actually beat the bottom line, top line by quite a lot. Their earnings came at 85 cents per share versus 64 cents, and revenue $13.3 billion versus $12.5 billion. Okay, and the reason for their surge is because supply chain issues are starting to dissipate. Their inventory came back up, and they started selling a whole bunch of shoes. Air Jordans to be exact, because I'm on the sneakers app like literally every day looking for new Air Jordans to buy. And they all get sold out still, so I know they're selling shoes left and right. So they're actually leading the way, making the market feel a little bit better today. Also, this is good. Mortgage refinancing going up slightly because mortgage rates have come down a little bit. Interesting. Even with the Fed fund rate going up, the prime rate going up, mortgage rates have not followed. It's starting to come back down a little bit. Well, it kind of makes sense because demand is weaker, but still. 6.3%, 6.34%, of course, is not really low compared to 2.25, 2.75, 3% from earlier this year, right? But far lower than the 7-point-something% that we also had recently. So these two things are good, relatively speaking, right? It shows that we're not heading into deep recession just yet. There are still a lot of buying, even with houses. What else is going on this morning? Well, Elon Musk did confirm yesterday that he will resign as CEO as soon as he finds someone foolish enough to take the job. After that, I'll just run the software and service thing. I just had a video yesterday about this because Tesla stock, as you guys know, has been tanking. Elon and Tesla holders has never seen something like this happen. This extended tanking of stock for Tesla, never ever, and it has a lot of people concerned, right? So most people think Elon's distracted. The bottom line is this, okay? He's already too busy running two major companies. Now he's adding a third, and it's just too much distraction, and that's why Tesla has so much FUD because of this, and that's why they're selling off. And plus, Elon himself has sold off a lot of shares too. So it's not just due to fear. He himself had to sell off $4 billion worth of stock at an absolute worst time ever. So I don't know if this is going to make Tesla stock go up. If he does find a CEO, I don't know who it's going to be. No one knows who it's going to be. But if he does find a CEO, and he steps down and he's just leading software and service team, if that's going to make Tesla pump. Because yesterday, this came out and Tesla still tanked. So I don't know if anything's going to help Tesla at this point. I guess we'll see.